All right, we can go ahead and get started. So, hi everyone, welcome to this session, which is called Big Picture: How China's Crackdown on Tech Will Play Out in the Long Term and Its Impact on the Investment Landscape. My name is Ray Ma. I am the founder of TechBuzz China, which is a community for investors and operators wanting to learn all about China tech. And I am joined here by two old friends, Helen Wong and James Tan. I will ask them to introduce themselves. Maybe I'll ask you to go first, James, because I actually, when I was working as an investor in China, I invested in one of the companies you co-founded. So could you give us a brief background to the audience about what you worked on before and what you're working on now?
Okay, thank you, Ray, and it's a pleasure to be here. We go way back. I'm James Tan. I'm a venture managing partner at the top venture capital fund in Southeast Asia itself. We are first checks into many companies, including some of the top unicorns and unicorns in this region. These include Carousel, Caro, Shopback, 99.co, Leaf, Polio, and many others. I'm very happy to be on the panel today. Thank you, Deal Street Asia, for the kind invitation. Rima, whom I met many years ago when she covered China as part of the management team at 500 Startups, which is now 500 Global. And I'm also very happy to be on a panel with Helen Wong, whom I met many years ago in China when she was part of GGV Capital, and I was a startup founder at that point in time. And we were looking for capital, hungry for capital as a very startup founder. And GGV just stood out. Everybody wants to have the GGV stamp of approval on their cap table. And then we reconnected at Qiming, where her activity then mostly in Southeast Asia really stood out because of the brand names that she has managed to get into, and actually quite early on. Yeah, great, thanks.
Yeah, well, you kind of introduced Helen already. Yeah, so Helen, I also met you, I think, right around maybe your tail end of time at GGV, which, as we know, is very active in both China and Southeast Asia, and also here in Silicon Valley. And then you were at, as James said, you were at Qiming for a while. Maybe you could tell us a little bit more about your experiences at those two firms, and maybe what you're up to now, because maybe not everyone has realized you're up to something new. I don't know how much you can talk about it.
Yeah. Sure, thanks, Ray. Yes, I have been in venture capital now for 20 years. I started with GGV Capital, started in the Bay Area and then moved to Shanghai in 2005. And then I have been with Qiming for the last 8 years or so. So always focused on the TMT sector. And I was quite fortunate to see the first wave of the PC internet. So we invested in Alibaba. I also led investment in Tuto. This was the early years. And then at Qiming, I was mostly witnessing the growth of the mobile internet era. So that was also very interesting period. I invested in companies like Mobike and also Luoji Siwei audio app. And then last few years, we saw that the China internet market was reaching a plateau in terms of the number of users. And so we started to look overseas. And so that's what brought me back to Southeast Asia, which is where I'm from. And so with that, I invested in companies like Akulaku as well as Red Doors.
Yeah, and Akulaku, I just interviewed the founder, William, actually, for one of the two podcasts I do. Very interesting company. So before, I guess, we go into a more detailed discussion, I thought I'd just update everyone, those of you in the audience, about what exactly are we talking about when we're saying China's quote unquote crackdown on tech. Actually, I personally don't really like that word, but I think it is the word that is being thrown around in media, and I think it's it's somewhat fair, right? Because some of the regulations are fairly severe, so you can't think of it as a crackdown. But what I would say is probably I would bucket these increasing number of regulations ever since the end of last year into three buckets. And the seminal event seems to be when the Ant IPO got pulled. So Ant Group, which is the biggest fintech company in China, and at the time the largest privately owned startup by valuation, its IPO was stopped at the very last minute, and most people sort of use that as the beginning marker for this so-called crackdown attack. But really, I think if you can bucket the regulations into three things, which is one, the first one would be all sort of China-specific regulations, so such as restrictions on gaming for minors, such as some of the content regulations. These are very specific to China, and you probably don't really need to think about it as anything more than really relating to the content business. And then we have things like that are regulations where China is trying to catch up, what I would say normalize or rectify to what the developed world has in terms of regulations. Into that bucket, I would put regulations such as the fintech rules that, you know, basically destroy the IPO, but a lot of these rules are sort of regulations that you would see in the developed economies, such as requiring you know, credit, more credit from Ant Group when they're putting out loans, such as when we see antitrust rules pulled out that eventually resulted in a huge fine to Alibaba, which and things that are going on even today. Today we learned that you know, Alibaba has to open up its ecosystem, its walled garden, to WeChat Pay, right? So these are rules that you see already in the developed world, but that weren't enforced. The anti-competitive nature of many of the actions that Chinese tech companies were taking weren't really on the radar of the government, so to speak. And now we are seeing a rectification. So it's going to start looking more like the rest of the world. And finally, there's a third bucket, which are, you know, the smallest bucket, which are basically rules that the Chinese government is pulling in for emerging technologies, such as the guidelines for algorithms that are currently out right now, where you know, the government is trying to regulate the transparency, explainability, the portability of algorithmic apps in China. And Chinese government's probably the furthest along when it comes to working on these regulations, although discussions around how to regulate algorithms are happening globally. So now, having given hopefully all of you guys a brief summary of what we're seeing in China, I'd love to hear from, you know, maybe you, Helen, first on what do you think, you know, as we were doing prep call for this, you said that you would think about the impact of these regulations on GPs, LPs, and founders inside of China. So let's start with inside of China first. You're based in Shanghai right now. You've been there, like you said, since 2005. What do you think are the implications of these regulations on those three groups?
Yeah, it's a big topic. First of all, you know, for a lot of VCs looking at the consumer internet sector, that there has been some time that, you know, people have been shifting attention away from the internet platforms, simply because, you know, we see the internet market plateau in China, and also because most of the traffic is just concentrated in the hands of the big internet giants. So there has been more activity in the enterprise space, in the biotech and healthcare space. So I think this new round of regulatory crackdown on big tech, in a way, is part of what you were saying, is a bit of a regulatory catching up. And there's also a part that I think took people by surprise, which is the crackdown on after-school tutoring. So I would say that if I can just summarize for the founders, I think if you were in internet space, you are quite nervous and you are quite uncertain about the future. On one hand, I think if you are not in the big tech, among the big tech players, you are probably hoping that this leveling of the playing field with the antitrust regulations would help your platform. But at the same time, you are concerned that the next wave of regulatory changes could impact your company in a way that you cannot predict. I don't think anybody predicted that overnight the after-school tutoring sector for K-12 subjects would just be wiped out. So I think that there is a feeling of uncertainty. There is a feeling of insecurity, and that, in a way, is a positive for us because as VCs, because I do see some of them wanting to go overseas, wanting to, have their base maybe in Singapore, especially companies that have the mindset to go become a global company. So that to me is positive because of my roots in Singapore and how I see myself being able to help them to move from China to Southeast Asia, for example. And if you talk about the LPs, I think LPs, I hear very different messages. On one hand, there are LPs who are long-term positive on China. They have made a lot of money in China versus other markets, say in Asia Pacific. They still believe that the long-term fundamentals are still intact. They have some concern regarding the regulatory changes, but they do not want to pull out yet. And they just want to basically watch right now. And then there are those who feel that there's been a paradigm shift in the political system and subsequently the financial system. And so they believe the rules of the game are changed going forward. And hence, they would look to diversify to other markets. So I think it really depends on how these LPs are viewing the changes in China. And I think the next year, hopefully, will give us more visibility into what's going to happen next.
Yeah, I absolutely agree with you. I think there are many Chinese founders, especially in e-commerce, but really across all sectors, even enterprise software, that are now looking at globalizing. That's with much more seriousness because, like you said, they are, I think it's a combination of that. They're concerned about regulatory overhauls, affecting their sector, but also they are much more confident in their ability to go overseas, especially neighboring Southeast Asia. I'd like to know, James, if you think that sentiment is warranted. Do you think that they should be so confident about entering Southeast Asia? You're muted. Oh.
Yeah. Okay, thanks.
Yeah.
I agree with you that the presumed lack of opportunity in China, and take it with a pinch of salt, is now causing them to look at opportunities outside of China. And it used to be, at least back when we knew each other, it used to be that they will go towards the US as a very natural next step. Mm-hmm. But their natural next step right now is Southeast Asia. You see a lot of them landing in Singapore first, knowing that their key market is not in Singapore, but in neighboring markets like Indonesia and Malaysia and so on. But they want to land in Singapore first, get their setup right, and then expand from here. So Singapore is the beneficiary from this crackdown.
Yeah, I hear constantly about stories about how more and more companies are setting up headquarters, sometimes global headquarters in Singapore, and more Chinese billionaires are getting, second houses there. So has it already affected the investment environment though? Has it, for example, on the founder front, has it made, salaries go up because there's more competition? And what about term sheets for startups? Is there more capital, flying in? Are there more acquisitions because some big Chinese unicorns are moving in and needing talent? What's happening on the ground?
Maybe I'll take that first. I think Helen can also lend some perspective on it. Mm-hmm. I think what the two of you has mentioned earlier in this conversation is that divestment is not happening. A lot of people have made a lot of money in China and continue to do so. And we don't see divestment happening, but there's a diversion of capital that would have otherwise gone into China, now interested in coming elsewhere like Southeast Asia. And China, a capital within China itself that would have been really just going to Chinese companies or Chinese funds, and now looking at can they go elsewhere with Singapore or Southeast Asia as the top of their mind. And if you remember, the crackdown really happened a year ago. So it's not like we are caught off guard. It happened a year ago with that common prosperity agenda by President Xi Jinping. And then it really started most famously because of Jack Ma's, Alibaba's Jack Ma's very frank rant against the regulators last August. So it's been a year. And then after that, we saw the different crackdowns and so on. So we have had time to adjust. So do the LPs, so do the large institutionals who are seeing this happen. And I wouldn't say there's any particular straw that broke the camel's back, but when you have large swath of sectors like education and gaming and so on being affected, it's time to look elsewhere. So we are seeing that investment interests come out to Singapore. This interest is not from the likes of the big boys like Tencent or Beijing, maybe about 10 years ago. It's unlike that because even Tencent itself, its stock price is down about 40%, if I'm not wrong, since the high of this year. It's not them, it's the younger boys. And by younger boys, they are still very big. They are like the Binance and so on. They're still very, very big, but they're younger. And they're looking to be diversified or at least not exposed to the regulatory pressures in China itself. Maybe Helen?
Yeah, I think there's a few issues here. One is, like James mentioned, we do see smaller tech platforms coming to Southeast Asia. For example, Futu, I think it starts stock brokerage, as well as we saw iQIYI. So I think there's a few things. One is, the regulatory risk, which you talked about, but the other is also that that it doesn't seem to be that much growth left in China. So I think that's where they need to find users overseas, and I think that may be actually a bigger impetus for them. And then the other issue that you mentioned is talent. So we have heard that there are a lot of Chinese companies coming in to hire a lot of tech talent, and I think the problem is the talent pool in Singapore is quite small, and so any small amount of competition from major platforms would mean that it gets more and more competitive for startups to get the same type of talent. And then there's another angle, which is the billionaires or the tech entrepreneurs, or even the Haidilao Hotpot founder, who's one of my classmates. He is also in Singapore now, and I think that's a different issue. Like basically they want to have a diversification of their wealth. So I think that Singapore being very stable place, and also a place where they can maybe start their family office. That's also a very good setting for them. So that's another impetus.
Yeah, I think when you were talking about earlier, James, I did forget to mention that like within the bucket of what I would call sort of China-specific regulations, one of the I would say there are probably two things, and maybe three if we count common prosperity among them. There are three sort of national level strategic objectives that are really urgent problems that the Chinese government needs to solve, right? One is the population decline, which probably feeds into, Helen, what you've been saying about the fact that there is not much more growth in China. I mean, there is in rural China, but you can also go to Southeast Asia to find some of the same growth. And then, of course, the choke point technologies, where China is heavily reliant on the West, U.S., but also even places like Japan, Germany, etc., for key technologies, such as semiconductors being the main one, but also you have I read in the technology list, like airplane engines, railroad, things that go into the high-speed rail, all these things. Like China might be a great manufacturing power and might have a lot of the market for these infrastructure projects, but they don't actually control the most core technology for many of these projects. So I guess what I would like to maybe go on to, so it sounds like Singapore is what you guys are both saying is a core area of interest, is key city. Are there other places in Southeast Asia that you guys are seeing, or in the region more generally, that are also capturing Chinese interest, or is it mostly just Singapore right now? Singapore. Indonesia tends to be the other country I hear a lot.
Yeah,
Sorry.
If you talk about founders, definitely I think that Chinese founders would look to the big markets, right? So it would be Indonesia, for example. So Akulaku, a company that I invested in, their main is Indonesia. And I think it makes sense given that it's the largest market in Southeast Asia. And also, Thailand has seen a new unicorn being born this year called Flash Express, which also has a Chinese co-founder. So I think, that you do see Chinese founders. There are probably, you see more of them in Indonesia, it being the largest market. JNT is another one. And of course the Shopee guys are all over Southeast Asia. But then, in other countries, I mean, Thailand is one that we don't see too many entrepreneurs, but one that this year everybody was happy to see a new unicorn emerge. So I would say that it's I think that Southeast Asia has certain opportunities for Chinese founders. But having said that, I do think it's important for the Chinese founders to be able to localize as well, because it's something that should not be taken for granted, because Southeast Asia is not like China. It's not one market. It's very fragmented and very diverse.
Yeah, James, did you have something to add to that?
I think Helen pretty much covered it. I know that China right now we are talking about it as if it's going downhill, no opportunities and so on. I think we all agree that there's still plenty of opportunities in China. It's just that during this phase, and that other opportunities elsewhere really present themselves better. But just to set things in context, I'm seeing, say, in the US, 400 plus unicorns. China itself has 170 unicorns, the second largest in terms of creating unicorns. The third largest is India with 100 unicorns. So India still has some ways to go, but there's also plenty of opportunities. But I think one of our mutual friends, William Bao actually says that it's way more difficult to invest in India, ironically, than in China. China is so much more easier to invest in it. So if you don't want to deal with the regulatory fragmentation of India, and you don't want to deal with the regulatory pressures of China, then you come to Southeast Asia, where there's plenty of regulators to deal with, but at least they are not interfering in the space. If any, they are encouraging such inflows.
Yeah. I mean, in defense of China, because I focus on China exclusively, there is a lot of opportunity in China. Like I said, it's either, the saying these days is either you go down, right, to rural China, or you go abroad. And I guess this panel really is the second. We're really talking about the second opportunity, going abroad. But I wanted to double click on what you guys were saying about Chinese entrepreneurs coming into Southeast Asia. And so, of course, there are some very notable successes like Helen, like Aku, largest fintech in Indonesia. And then, of course, some people consider C a Chinese company because of the founders. But do you guys think those companies were founded 5+ years ago? What about today in 2021? Do you guys think that there are any advantages that Chinese entrepreneurs bring to the table? Like, with you guys as investors, how excited are you when you're encountering Chinese entrepreneurs trying to expand to Southeast Asia, or are you preferring maybe more local teams, or does it depend on the industry and the team? I suppose. Yeah, Helen, go first.
Yeah, for me, it definitely depends on the industry that they're in. So I think what Chinese entrepreneurs bring is their experience from a more developed market. So they have a bit of the benefit of the time machine, and also they bring technology, because I think China has no scarcity of tech talent. So that and also I think the third one would be a very entrepreneur and hardworking work ethic, right? So that combination is quite good. But of course, when you enter certain industries that are, may not favor you, may favor the local national champion, then the local entrepreneur may be more at advantage. So I do think it depends on the sector. It looks like e-commerce, logistics are areas that the Chinese founders have had a large advantage, or have been sort of doing very well in Southeast Asia, and then other sectors, it really depends. But I think that what I find interesting is that this past year you do see more and more types of Chinese companies coming overseas, going overseas. Used to be the more internet companies, but in recent times we even saw AI companies. We saw like B2B supply chain companies. We even saw consumer brands. So like the likes of Haidilao Hot Pot, but we also saw like Genki Forest. We saw a lot of brands coming out to Southeast Asia as they look for further growth. So I think that that is quite interesting. But of course, not to say that local entrepreneurs should feel threatened. I think local entrepreneurs have their strengths as well. So we would we'll look to choose carefully whether it's a Chinese entrepreneur or a local entrepreneur to back.
Mm-hmm. Do you think with e-commerce and logistics, part of it is because, well, first of all, e-commerce is just highly developed in China. It's just a much larger market in China than elsewhere. But also, do you think it has to do with China's sort of supply chain advantage because so many of the goods are made there and need to be transported from there?
I think yes and no. There's definitely a huge supply chain advantage that China has, especially during COVID, where a lot of factories around the world are closed. But if you look at a lot of supply chain or e-commerce companies, like supply chain driven companies, actually they're targeting the US or the European markets because during COVID we saw that e-commerce penetration in the developed countries actually rose, right? It's like close to 20% or so. So,
Mm-hmm.
But then Southeast Asia, it grew really quickly, but they had more issues with, I think even customs. I think Indonesia customs is very difficult, and the tax is also an issue. So I think that you don't see such a huge growth of e-commerce, at least the cross-border ones I've seen, compared to the ones targeting the US and European markets. I think that Indonesia, if you look at the e-commerce, is still driven by the domestic supply chain rather than the cross-border supply chain. So I think you just have to look at each country on its own and whether it makes sense, whether cross-border can win the local e-commerce or not.
Mm-hmm. James, what about you? What do you think about the advantages of Chinese entrepreneurs working in Southeast Asia? What are the sectors that you would favor and not?
The problem with going after Helen is that she pretty much covered everything. Let me just try to let me maybe address it from another angle, which is that rather than companies coming over, we are also seeing individuals who are coming over. Much less we will go to Silicon Valley and land there for a while and say, hey, we want to start a company, global company starting from Silicon Valley. Or you go to Beijing and you say you want to start a company capturing the whole of China from Beijing. So what we are seeing now, or at least I'm seeing now, is a lot of Chinese who are coming in and saying, can you take a meeting? Can you just introduce me to Southeast Asia itself? Let me know what's happening and so on. And these are individuals who are not famous, no track record, nothing, but they're hungry. They come over here, they have spent some time here, maybe as a student in Thailand, in Singapore, and so on. And they're interested in doing something here. And that's very much similar to the co-founder of Seek, who came here to study and decided to stay on to do something. And because of his Chinese background and of course, because the company is doing well and so on, he was able to get 10 cents investment. So I think many of these Chinese individuals who are coming over will be a very natural bridge to raising Chinese capital.
Mm-hmm. That's I think what happened with William at Akulaku, right? So sort of started off with a Bitcoin business in Hong Kong and then pivoted into Indonesian fintech, but brought with him a lot of Chinese investors. So now we have about a little over 10 minutes left. I do want to give the audience some chance to ask questions. If you do want to ask questions, you could put it in Q&A and then I'll be able to see it and then accept questions. But meanwhile, I'll go on with our discussion. So I think, Helen, you had talked about in the past year, because of COVID, there's a lot of interest in the US and Europe as well, which is also what I'm seeing. I think Shein is probably one of the most exciting. I guess it's not a new startup, it's an old startup. It's been around 10 years, but I think people in the US are definitely starting to explore it. A lot of that, a lot of the success we attribute to, Chinese companies expanding abroad, at least here from when I talk to people, is because there are now increasingly Chinese companies that are owning the channels or building the channels, right? So like TikTok being a great marketing channel for Chinese brands, and then with Amazon, for example, kicking off a lot of the Chinese merchants, there are so many investments that I hear of basically, Chinese companies trying to replace the Amazon ecosystem by building a platform, by building, Shopify clone, and then building logistics on top of that, etc. So do you guys think that is going to be the playbook for Chinese companies expanding into Southeast Asia as well? And before I let you answer that question, actually, I will just note that the reason I bring this up, and I think it's somewhat related to the regulations that we're talking about, is that while there are many, sort of restrictive policies, one of the most unrestrictive or encouraging policies out of China currently is cross-border e-commerce. So the government has actually put in a lot of effort, money into having special zones where they're promoting cross-border e-commerce, not specifically to Southeast Asia, but just globally. So yeah, maybe James, I'll ask you to go first, since we let Helen go first the last 2 times. So
there's also some questions on the Q&A chat.
Okay, I'll look into that as well. Mm-hmm.
Yeah, I wouldn't dismiss altogether the opportunities for Chinese investors or Chinese startups to succeed here. If I get your question correctly, they have been successful and they will continue to be successful here. The problem is and Helen alluded to it earlier, the localization bit, and just the different countries that we have here, which is problematic for someone to scale very quickly itself. So there are inherent challenges in this region that people should know, whether they're Chinese or whether they're from somewhere else. And then in terms of fundraising and so on, as long as you're doing well, I can assure you that there are investors who will want to talk to you, whether they're from China or the US or from Southeast Asia. I hope I'm answering your question.
I was more specifically asking about the e-commerce channels that are being built up, but yeah. Helen, do you have any comments? Or maybe my question was a little confusing.
Yeah, I think if you mean the e-commerce apps, right, that are directly consumer facing, I think that worldwide it's not easy to acquire new users. I mean, the transition between even Shopee, Lazada, and Tokopedia and like Bukalapak, it's already very intense, right? So I don't think like as an investor, I'll be quite willing to bet another company that is directly consumer facing. But I do think that in countries like the US and Europe, the difference is you have a lot of they call independent websites, right?
Yeah.
So yeah, so that market with Shopify and with all the infrastructure being quite ready, logistics, payments, everything. So that is still a plausible way to build a standalone business. But I think in Southeast Asia, the market tends to be more, probably more similar to China, where it's the big centralized platforms like Shopee winning, right? Of course, you have social e-commerce. That's another play. But I would see that longer term it goes more towards the centralized platform, and then social e-commerce remains like very how should I say, disorganized, very very decentralized, for lack of a better word. But I do see companies building tools on top of them. I don't know how much sellers are willing to pay for those tools, so maybe it has to be tools plus supply chain. But if you ask me, those plays are, can they become, super big? I don't think they can become like a C group, right? That not, in the hundreds of billions. But, they could grow to a decent size for a good outcome. That's still possible, yeah. But I think what we see more is also brands, right? Like recently Outer, which was an outdoor furniture brand that grew with, in the US. I mean, it's a also a Chinese team. I think that kind of plays, it probably works better in the US, because of the higher purchasing power, because of the, the ability for people to accept, more standalone brands and standalone, independent sites. So I think that story plays out better in the West.
Right. Yeah. I was basically, Helen, what you're saying is that at least I'm familiar with China, not Southeast Asia, but I remember that only like even for a big brand like IKEA, they only put up their own independent website in China, e-commerce, last year in March of 2020. So it took them so long for them to come up with you couldn't order, IKEA from just their own website until then. So yeah, going to the platforms, going to a Taobao or Tmall was basically the way that you would buy IKEA. Okay, we do have 2 questions from the audience, so I will go there first. So we have a question from Eudora who asks, as investors behind Chinese companies with a global vision, which stock exchanges do you usually consider to be more viable options to generate exits from such investments? So basically, which stock exchanges are you looking for exits? And I guess that's one thing we also should mention, that right now there is uncertainty in China about where you can list if you are, a company with quote unquote significant amounts of user data. And that's something we saw with the DD IPO, where now the company's in the middle of a data security investigation. But I don't know if either of you have preferences on the stock exchanges you would like to see, or maybe commentary on what you perceive to be the future of this situation, of this conflict that we see going forward. Are you expecting more foreign listings of Chinese companies?
Yeah. James, do you want to go,
Helen,
please?
Helen, go ahead.
Yeah, I think
Go ahead.
for the longest time, I always thought that Chinese founders were very fortunate because they had 3 venues to choose from. They could go public on the US, usually NASDAQ or NYC. They could go public on the Hong Kong Stock Exchange, or they could go public on the A-share market. And in recent years, we have the Star Board as well for technology IPOs. So the Chinese founders had more exit venues, whereas for Southeast Asia and for I think even Indian companies, usually going to the Nasdaq was the choice. I mean, maybe India has the local exchange as well, but only for more profitable companies, right? So I think that having said that, recent years, especially with this scrutiny on BIE, the scrutiny from the regulators for foreign IPOs has made it such that we probably will see the flow of IPOs moving towards Hong Kong and as well as the A-share. But I think for a lot of companies that were invested by US VCs, maybe Hong Kong makes better sense, because the bar to go public in the local exchange is still quite high. So I think that there's a lot of regulatory approvers. There's a lot of sometimes you need to be in the queue for the local IPO. So I think that probably you see Hong Kong market, and you already see a lot of US ADRs moving from Nasdaq or NYC to Hong Kong. So I think that for Chinese companies, you definitely see that move. And then I think what is interesting in recent times in Southeast Asia is we saw IDX, right, being an alternative venue. So we saw Bukalapak having a very successful IPO and likely to continue that trend. And then also we've seen in recent times the whole frenzy around specs. I think there was at one time about 6 or 7 specs equal to the number of a number of unicorns in Southeast Asia, and as well as foreign specs which were choosing Southeast Asian companies. So there was a lot of money chasing those unicorns. Of course, now things are a bit different because the frenzy around specs has died down. So I think some companies in Southeast Asia are choosing to go public directly on the Nasdaq. So I think on the whole, we do see more exit venues and maybe a shift towards the local exchanges. I would say. Yeah. And also Singapore, I think SGX is trying to ignite more excitement around the exchange, and the recent pre-IPO fund by EDBI is also interesting. So we hope that there'll be more exits in the local exchanges.
Yeah. The SEC is too busy anyways. But anyway, maybe James, you can answer this question. I think you answered it actually a little bit earlier, but I'll just reiterate. This is a question from the audience. For during this crackdown, for the big Chinese companies, Tencent, Alibaba, etc., are they looking to diversify to Southeast Asia for investment opportunities, or refocus capital to the home ground?
We have seen a lot of them having more focus in this area. They have already diversified in the many years that they have functioned here, and not just here, but the rest of the world. We are seeing more capital, at least from hearsay, conversations with the executives who are based here, and now looking at what else can they do here, what else can they invest in here even. So we are seeing more capital outflow from HQ in China out to Southeast Asia where they're based.
Mm-hmm. Not just Southeast Asia, though. I think also even Europe.
Yep.
I think U.S. is the part that's a little complicated, but I think even to Europe, I think I remember seeing a headline last week. I think it was like Tencent invested in 5 gaming companies in Europe or something in a month or a week, something like that. Okay, and I think actually we are out of time. I don't know if we have time for one more question, or if we're out of time. Maybe I'll just ask one last question. It's really brief because you can probably answer this in 30 seconds. How long do you see Beijing's heightened antitrust probe into tech giants lasting? 1 to 2 years, or I think the question mark. Maybe you can just give really brief answer. James, go.
1 or 2 years.
You think 1 to 2 years? Okay. All right. Helen, what about you?
I think more intense scrutiny over the next 1 to 2 years, but I think that it would be a long-term, ongoing, stronger control over the sector in years to come. Yeah,
right.
That's not going to change.
Yeah, I think, like I said, if we believe in the whole rectification of the sector. Yep. Okay, I think that's all the time we have for today. I want to really thank everyone for joining us for this session, and thank you, James. Thank you, Helen, for participating, and thank you, DL Street Asia, for having us.
Thank you.